It's the rate cut you get when you don't get a rate cut. As expected, the Reserve Bank left its official cash rate on hold, but there was an unusual twist in the tail, a clear signal that lower rates are on the way. Here's Philip Lasker.
Reserve Bank Governor Glenn Stevens, he's Mr Popularity, with a Nielsen poll giving him an 83% approval rating.
Well, he might be even more popular in May if the Reserve Bank actually does cut borrowing rates by another 25 basis points.
And it's definitely on the cards. The RBA board said that growth is somewhat lower than earlier estimated, but it would be prudent to see the next inflation numbers before considering a further step to ease monetary policy.
It was probably the most transparent of any RBA statement that I've actually read, and that may reflect the fact we have a new assistant governor who would have actually drafted a significant portion of that statement.
Deputy Governor Philip Lowe isn't the only newcomer. Former manufacturing sector lobbyist Heather Ridout is also now on the board and is concerned about the damage done to industry by the strong dollar and relatively high interest rates.
There's no doubt that the rate-sensitive sectors are struggling, housing, the consumer, credit growth and the like, and so provided inflation is well behaved, it does suggest that rates at current levels are too high, and the RBA seems to be acknowledging that now.
So the next inflation numbers will hold the key to Australia's immediate interest rate future.
I think that's a risky strategy because we know that inflation numbers can jump around and they can sometimes send a signal that's not consistent with what else is going on.
And Bill Evans says the RBA has been caught out before, waiting for an inflation number to trigger a rate move in 2007.
And of course the number was surprisingly benign, which meant that they held off tightening for 3 to 6 months. And got behind the curve.
I like to think of them as the Bundesbank, if you like, of the Southern Hemisphere. And I really do think they want that rubber stamp of a softer inflation number to actually make them feel very confident that they can cut rates without creating a problem for themselves either later this year or early next year.
And then, of course, it will be up to the major lenders to decide how much hits your pocket.